I want you to picture this. It is the last working day of June. Your HR is waiting, the finance team is waiting. An employee took 2 days unpaid leave. Someone else joined your team mid-month, and you still have to calculate the pay, NSSF, SHIF Housing Levy correctly for every single employee. If you're doing this in manually or in a system that does not handle the Kenya statutory correctly, you're actually spending money and time on a system that you do not need. In the next couple of minutes, we are going to run the full June payroll for a demo company that we set up from zero, submitted to payslips. So let us start. I am Ibrahim, member of ITKenya Solutions, and we help implement ERPNext for Kenyan businesses, Payroll, M-Pesa, KRA, eTeams, inventory, HR, and many more. So the company we are going to run payroll for today is a demo company. We are calling it Jaguar Petroleum Limited. It has 15 employees, 6 departments, permanent staff and contract workers, and they have a salary ranging from 35,000 to 450,000 Kenyan shilling. Let us set up the foundation and start. First thing we do before running a payroll is confirm the company is correctly set up. So we check. This is the anchor. Every calculation, every payslip, every report traces back to this company record. Currency is set to Kenyan shillings. Our country is Kenya. The good, and the foundation is confirmed. So let us move to the next. The second checkpoint is the payroll period. This is actually critical. If payroll period does not exist, ERPNext cannot calculate the income tax. So as it needs to know which tax year we are in, so the period is set, we are clear to run. By now, you might have heard what is salary component. In case you don't know, let me just explain. A salary component is the individual items that are found on your payslip. So your payslip has two sides, the earnings and what gets deducted. On the earnings side, you get things like the basic salary, the housing allowance, health insurance, and on the deduction side, you get things like the NSSF, SHIF Housing Levy, or PAYE. Each one of those salary components in ERPNext, we only define it once, the name, the type, the formula, or rate, and the system uses it every single month for every employee automatically. Let us look at the salary component, building blocks for every payslip. So we have the earning side and the basic salary. From this, everything will be calculated from here. It's not a fixed number and it changes per person. For the NSSF, we have 6% of the gross salary. It's capped at 6,480 Kenyan shillings per month. We define that rule once here, and ERPNext will be applying that rule in every permanent employee automatically. SHIF, which is 2.7% of the gross, and its minimum is 300 Kenyan shilling. Housing levy, that's 1.5% of your gross, so there's no cap. And as for PAYE, this one does not have the fixed rate. It links the tax slab, which we shall see in the next step. The slab tells ERPNext which percentage to apply to which portion of the salary. And these are the ingredients. The salary structure is the recipe. Let us look at the tax slab next. In Kenya, pay is not a flat rate. It is progressive. What that means is the more you earn, the higher your percentage you pay, but only on the portion that is above the threshold. So someone earning about 35,000 Kenyan shillings pays around 10% on everything above personal relief, while someone earning 450,000 pays 10% on the first slice, 25% on the next, and 30% on the next, so and so on, up to 35%. The tax slabs in ERPNext is where those bands live. Once it is set up, the system reads it and it applies it correctly automatically. HR never has to remember the bands or calculate them manually, and your accountant knows this number and ERPNext always remembers them. So as you can see here, we have the Kenya Pay tax slab that we had already created. As you can see, from 0 to 24,000 Kenyan shillings, we have 10%. 24,000 to 32,000, we have 25. 500,000 to 800k, we have 32, and above 800k, we have 35%. Personal relief is 2,400 shillings per month, applied to every employee automatically. It's effective from July 1st, 2023, and ERPNext will not apply this slab to any period before that date. Everything is date controlled. In a few minutes, we will run the payroll. ERPNext will read the slab and every single employee and apply the correct rate to the correct portion of their salary. So there will be no need for manual calculation or spreadsheet. What is a salary structure? So a salary structure groups together all the earnings and deduction, and it applies them to a particular employee. You only bill it once and then you assign it to employee or employees. So for this particular project or demo for Jaguar Petroleum, we have two types of salary structures. One is for the permanent staff, which includes the NSSF, and one is for the contract staff, which does not include the NSSF. When payroll runs, ERPNext looks at which structure employees assigned to. It applies the correct earnings and deduction and calculates everything automatically. As I said, two salary structures for Jaguar Petroleum. So we have Kenya Statutory Payroll 3, which is for permanent staff. And as you can see, it is submitted, which means it's active and it's ready in use. On the earnings side, we have the basic salary, and it's formula based. Pulls the base salary from each employee records, and also the deductions, which we have here: NSSF, NHIF, Housing Levy, PAYE. Now, let us switch to the contract structure. Look at the deductions. So here we have no NSSF. Contracts workers fall under different statutory bracket. The structure already knows this, so HR does not have to remember or apply it manually every time when he or she is running a payroll. As of now, we have built the recipe and now we need to assign it to each group. A salary structure assignment is what links a specific employee to a particular salary structure with their base salary and start date. In this, ERPNext gets to link a particular employee, knows how much they earn and which category or particular salary structure they belong in, either the permanent or the contract base. And when ERPNext or the next payroll runs, it reads these assignments. Every employee gets the right calculation automatically. Since we have the structure, let us now confirm the assignments. Here, the salary structure assignment that we'll be tackling is for Jaguar Petroleum, and every employee in this list is linked to our structure with their base salary confirmed. So for starters, we'll start at Robert Karaoke. As you can see, the salary structure is Kenya Statutory Payroll 3, and their base is 450. This is the figure in all his deduction will be calculated from. So our next person is a contract-based John Jagger, and the salary structure is the Kenya contract staff. His base is 80,000 Kenyan shilling. So every employee, since every employee is confirmed and the base salary is locked in, when we run the payroll in a moment, the system reads these assignments and knows exactly what to calculate for each person. Before we run the payroll, there is one more thing we need to check, and this is the thing that most payroll systems get wrong. So leave application for June. As you can see, we have 3 leaves that have been this month, and that is for Grace Catherine, 3 days annual leave paid with no effect on salary, 2 days sick leave also paid, and our third person is Peter Otieno. So he has 2 days leave without pay and running from 8th to 9th of June, and his status is approved. So what this means is Peter should not receive his full month salary and as his base is 45,000, 2 days unpaid means his payment drops to around from 29 to 27, and his gross should be rated down automatically. We're going to confirm this in the ERP, how the ERP handles this without any manual calculation. Watch out what happens next when you run the payroll. Alright, this is it. We are creating a new payroll entry. So to handle this, we'll start by payroll frequency, setting up the company, start date, end date, payroll period. Once we're done, we get to click the employees. ERPNext will be reading every salary structure, and it is checking employee type, department, structure, base salary, as you can see. So let us select all the 15 employees and calculate for every single person on this list. ERPNext is applying the tax slab, calculating NSSF on their gross, SHIF Housing Levy and PAYE using the progressive bands we had confirmed earlier. You can see the gross and the net figures appearing, different numbers for every employee because every employee has a different salary and a different tax position. This just took ERPNext a few seconds in Excel. This is a morning's work, only 10 minutes or less. So we are about to finish, and we have already created a payroll for now the 15 employees that are working at Jaguar, and ERPNext has already calculated every salary, that is PAYE, NSSF, SHIF Housing Levy, based on each person's structure and base salary. For this demo, we have already verified the individual payslips. What's remaining is now just to submit. So let me select all the 15 employees and submit. It's done. So June payroll is done, and 15 employees, every statutory deduction calculated correctly, no spreadsheet and no manual calculator. One question we get from most companies considering to switch from Sage, Tally or other ERPs is, what happens to our payroll history? We have been on Sage since January, and the P9 needs the full year. As you all know by now, the P9A is the annual tax deduction card that KRA requires for every employee, and it shows how much each employee earned and how much pay was deducted month by month for that full year. And when a company is switching from, let's say, Sage to ERPNext Media, the new system only has records from the month they moved, January to May, are still Sage. So what we do is import those Sage year-to-date figures into ERPNext as opening balance. Then from June onwards, ERPNext runs the payroll. The P9A report in ERPNext shows both the Sage history and the ERPNext months in one single report. One report, full year, exactly what KRA needs. So as you can see, let me open the Kenya P9A report. These figures actually came from Sage. We imported them as opening balance when Sage company migrated. So June, ERPNext, one report January to December for gross per month, pay per month, annual report totals. This is what KRA needs for the annual return. This is what your employees use for the personal filing, tax filing, and it's generated actually in seconds. So moving from other ERPs to ERPNext is not a hassle. Does not mean that you'll be losing a history. So that's it. We have just built the Kenyan payroll from ground up, including the salary components, tax slab, salary structures, employee assignment, live payroll run, verified the payslips and submitted them, and the full P9 for KRA, all in ERPNext, one system, and it's all automatic. If your business is still running payroll in Excel, or you're using a system that does not support the Kenya statutory payroll, and you're on another ERP and you're planning to shift to ERPNext, there's no better option than this. Let us talk. We handle the full setup: payroll, M-Pesa integration, KRA, e-teams, inventory, all at fixed pricing. We are at Nairobi. To learn more about payroll and payroll migrations, we have a couple of blogs that we have written. The link is in the description. See you on the next video. Thank you.